Good morning, good afternoon, good evening, wherever you are, and welcome to our RWA series where we are looking at the impact, the opportunities, and the trajectory of the real-world asset tokenization is going or heading alongside the crypto markets and blockchain technology. And the crucial question for investors is, who are the likely winners of the RWA boom? If you want to know more about that, this is the first installment in the form of episode 4 of our RWA series, where we'll be looking at 2 to 3 of those winners. But before I proceed, guys, please know that what I'm going to share with you in this video is not financial advice. These are just my own opinions, and if you do require financial advice, please approach someone who is trained to give you financial advice. The information contained in this video is just for educational as well as entertainment purposes, and this content is also not targeting UK audiences, because the UK authorities do deem anything crypto related pose great risks to investors. Therefore, you should not be watching any crypto related content, and you must always do your own research. Make sure you do not jump into things you do not fully understand. That said, let's come back to the winners that are coming out or that are potentially going to make it big with the much anticipated real-world assets boom. Which blockchain projects will benefit the most? Our top picks, we start with the first 3. While many networks are competing, and we will analyze a few of them, the data so far suggests that Ethereum, putting aside its struggles when it comes to the price movement of the ETH coin, and its ecosystem are the front runners and will likely benefit the most from the influx of real-world assets on chain. As of 2024, Ethereum was the dominant platform for tokenized assets. It hosted 58% of all tokenized value by one estimate, including the largest stablecoin by many RWA projects. For example, the European Investment Bank's landmark 100 million digital bond was issued publicly on Ethereum, and MakerDAO's real-world RWA vaults on Ethereum have taken in real-world collateral like real estate loans and US Treasury bonds exceeding 1.6 billion in RWA on-chain backing for the DAI stablecoin. Ethereum's mature smart contracts ecosystem and security make it a preferred choice for high-value assets. Tokenizing trillions in assets requires robust blockchain infrastructure. In this section, we will analyze some major public blockchains and protocols that are well positioned to benefit from the RWA tokenization, using metrics like total value logged, existing RWA projects on them, ecosystem strength, and enterprise partnership. I will try and also highlight some permissioned or enterprise blockchain platforms being used for RWAs, but that may be the subject of upcoming videos. Right now, we are focusing on Ethereum. And for those who are still confused about this RWA narrative and the big dead of the space, which is Bitcoin, money or fiat in other terms, and commodities like gold, tin, silver, and so forth, they still exist alongside each other. And alongside that, you got the internet. So the likes of Ethereum could be the internet of finance. It is the internet of finance, so to speak, including many layer ones, of course. So don't confuse those two. Okay, public blockchains position for real-world asset adoption. Well, many layer 1 blockchains are vying to host RWA activity. Let's start with the first 3 prominent ones with an assessment of their RWA traction and ecosystem. And obviously, the first one is no surprise. It is Ethereum and its ETH coin. So do not write off Ethereum. I'm just saying, but do your own research, of course. The leading smart contract blockchain and de facto hub for RWAs is Ethereum. Ethereum currently has the highest TVL in DeFi, approximately 46.3 billion by the end of April 2025, indicating a large pool of on-chain liquidity that tokenized real-world assets can tap into. It hosts by far the most RWA projects. For example, MakerDAO's RWA vaults on Ethereum hold over 1 billion in real-world collateral, trade finance loans, real estate bridge loans, short-term bonds, and so forth, all backing the DAI stablecoin. Tokenized Treasury bill tokens like Ondos or USG, Franklin Templeton's Benji, and backed finances tokenized bonds all utilize Ethereum or its layer 2s for issuance and settlements. The ecosystem size is unmatched, thousands of dApps, wallets, and users, which makes Ethereum attractive for RWA issuers to reach a broad market. Enterprise adoption is strong. Ethereum was used in high-profile pilots like the EIB digital bond issue in 2021 and Societe Generale's tokenized bond in 2022 through its Forge subsidiary. Even when institutions use permissioned variants, they often remain Ethereum compatible. For example, JP Morgan's Quorum, for instance. Enterprise partnerships, the Ethereum Enterprise Alliance is hundreds of members, including banks and tech firms. All this means Ethereum provides liquidity, composability. Here, you're talking of DeFi integration as well as institutional trust. Key factors for real-world asset growth. Its main challenge, though, is scalability, which is being addressed by layer 2 networks. But now there's talk of actually trying to scale layer layer 1 because these layer 2s are acting like vampires, chewing or eating out all the value from Ethereum and spreading it to their own chains and ecosystems, with little benefit accruing to Ethereum and the Etcoin. Overall though, Ethereum is the primary platform for RWAs today, with the most real value logged and the most active development. Next, let's look at Binance Smart Chain. Yes, you heard it, Binance Chain or the BNB chain. A high throughput chain with a larger user base, though more retail driven. BNB chain, formerly Binance Smart Chain, has TVL of around 5.5 billion at the time of recording in DeFi, making it one of the top 3 chains by TVL. Its low fees and Binance ecosystem integration attracted many users. In terms of RWAs, the Binance Smart Chain was notably used by Binance to offer tokenized stocks of companies like Tesla, Coinbase and Apple back in 2021. Even though that was reversed, those tokenized stocks issued via a partner, Digital Assets AG, which allowed Binance users to trade equity tokens backed 1-to-1 by shares. However, due to regulatory pressure, Binance paused those offerings. Aside from stock tokens, BNB chain hosts numerous stable coins. It used to have its own BUSD, which I think has been discontinued now. I'm not sure if it's still in existence. You got USDC, USDT, which themselves are real-world assets backed. For example, USDC reserves include US treasuries. So is Tether. The Binance Smart Chain ecosystem is large, hundreds of dApps and many users, especially in Asia, but it has fewer enterprise real-world assets initiatives compared to Ethereum. Still, enterprise partnerships exist indirectly via Binance. For example, Binance Custody exploring tokenized bonds, or collaborations in jurisdictions like Kazakhstan for a digital asset exchange on Binance Smart Chain, or now the Binance Chain. Binance Smart Chain's strength is its scalability and low cost, which could be useful for high volume asset trading, for example, micro shares or emerging market assets. If regulatory clarity improves, BNB Chain could resume tokenized stock trading or similar offerings for mainstream investors. So in sum, the Binance Smart Chain is technically capable and has a captive user base, but its RWA role so far has been limited to exchange-centric tokens and stablecoins. Its future in RWA might hinge on Binance's strategic pushes in regulated markets. I think with what's happening in the US, we may see something else coming from Binance, so watch the space. Next is Solana, a high-performance layer 1 known for its speed and low latency, now quoting institutional use cases. Yes, it's got this moniker of being the meme chief, but it's also aiming for other things, and RWA space is one of them. Solana's TVL is about 7.2 billion, ranks number 2 behind Ethereum as of April 2025, and it has recovered strongly after the 2022 downturn. Solana's differentiator is its throughput, which is in terms of tens of thousands of TPS, and very low fees, appealing for financial assets that might require high-frequency trading or large user volumes, for example, retail stock trading or in-game DeFi activities. Solana has made inroads in RWAs in a few ways. First, Circle's USDC stablecoin, which is a cash-backed asset, is native on Solana and widely used, indicating Solana's ability to handle real-world currency tokens. Secondly, back in 2021, FTX, in partnership with Digital Asset AG, launched tokenized stocks on Solana, offering 24/7 trading in 50+ equities like Google and Tesla, with actual stocks held in custody backing the SPL token. Those were accessible internationally, not to US persons of course, and showcased Solana's capacity for traditional assets, and that effort ended with FTX's collapse, but it proved the concept worked on Solana. Fast forward to 2024-2025 period, Securitize, which is a regulated tokenization platform, announced integration with Solana to offer tokenized securities to institutions. For example, Securitize is onboarding an Apollo Capital private credit fund, ticker symbol ACRED, ACRED, onto Solana, leveraging Solana's speed for improved liquidity. This indicates growing enterprise interest. Solana's ecosystem, more smaller than Ethereum's, is robust. It has a thriving DeFi scene, NFT marketplaces, and so forth, and importantly, has support from traditional finance via the Solana Foundation's partnerships with the likes of Solana Labs, who worked with JP Morgan on project guiding transactions. Enterprise partnerships include Visa, and that began using Solana for USDC settlement back in 2023, showing confidence in its reliability. Solana's high throughput could benefit use cases like real-time trading for tokenized forex, stocks, or payment assets. The main concern was Solana's outages in the past, which is still an issue, but improvements have been made to stabilize the network. If it maintains uptime, Solana could become the Wall Street of blockchain for high-volume assets. Its recent push in RWAs, including support for structured credit products on-chain, makes it a strong contender for certain asset classes, for example, funds and equities. Now to the last of these chains or layer 1s of blockchains that we're going to be featuring in this episode, you got Polygon and its Pol token, formerly Matic. This was Ethereum's leading sidechain or layer 2 scaling solution back in the day. I think that has been surpassed now by, I think it's Arbitrum or Optimism, one of those. And Polygon had a focus on enterprise adoption. Polygon is a TVL in the 1 to 2 billion range. Its proof of stake chain sits just outside the top 10 in TVL, and it has become home to many DeFi and NFT projects. Polygon's big advantage is its Ethereum compatibility plus low fees, which attracted a slew of corporate and institutional partnerships. In the RWA arena, Polygon has some of the most notable real-world integrations. But how much are they worth? Those integrations is yet to be seen, because that is not yet translated to value accruing to the Pol token. It's still struggling. We were expecting big things from Polygon this cycle, but so far, maybe it's in line with the struggling altcoin markets. Only Bitcoin's time at the moment. So the first integration was the Franklin Templeton's on-chain US government money fund, which expanded to Polygon back in 2023, marking the first US mutual fund on a blockchain. Each fund share is represented by a Benji token on Polygon, and investors can transact these via the Benji app, with Polygon handling the ledger of record. Franklin chose Polygon to expand compatibility with the Ethereum ecosystem while keeping costs low. JP Morgan's Project Guardian with MAS or MAS executed foreign exchange and government bond transactions, also using Polygon as the public network rail back in late 2022, involving tokenized yen and Singapore dollar deposit, which were swapped for a tokenized bond. Back then, it was a milestone for DeFi in banking. Polygon has an entire business unit, Polygon Labs, quoting enterprises. For example, Hamilton Lane, a major private markets firm, tokenized portions of 3 funds on Polygon back in 2023 via Securitize to give qualified investors access to private equity opportunities. Also, UK FinTech 2030 used Polygon for a regulated tokenized equity issuance under FCA Sandbox. Now, let's look at the ecosystem and metrics for Polygon. Polygon's active addresses and partnerships are strong. It's integrated into Coinbase's Layer 2, which is Base, as a partner and as projects like Realty, tokenized real estate originally on Ethereum, bridging access to Polygon for cheaper trading. Polygon's upcoming ZK EVM Layer 2, which might further improve its appeal for real-world assets by combining Ethereum's level of security with scalability, could also be a game changer. What about its enterprise partnerships? Well, Polygon is perhaps the most high-profile partnerships. Apart from Franklin and Templeton, it works with governments. For example, Rajasthan, India for land records on Polygon, payments giants, MasterCard's Artist Accelerator NFTs, but that's more NFT side. And identity solutions, Polygon's ID, which could tie into KYC for security. The Polygon Enterprise Alliance include the likes of Ernst Young and Infosys, aiming to bring Web2 companies on chain. So Polygon's strategy of being enterprise-friendly Ethereum seems to be paying off in tokenization. It offers institutions a familiar, secure environment that is EVM compatible with scalability needed for higher volume. The fact that a 1.4 trillion asset manager like Franklin Templeton and a leading private equity firm, Hamilton Lane, use Polygon for real fund shares is a strong validation. Polygon's native token, the Pol token, and the network stand to gain if these tokens see wider distribution and usage on its rail. That's the first installment on the leading blockchain networks or layer 1s that are going to be big winners. We've covered Ethereum, Solana, Binance Chain, and Polygon. So far, gave you one more, which was a bonus, which was Polygon at the end. What are your thoughts about these 4? Let us know in the comment section. Do you hold any of these? Again, let us know in the comment section. Until the next one, guys, this is FD for Sage5.tv signing out for now. Bye.